Thank you for joining me. I'm Alexandra, and I want to talk about Walmart. Walmart does retail. They also have the highest revenue of any U.S. company, publicly anyway. Um, Internationally, I think Saudi Aramco is beating them, but they weren't public a couple of years ago, so you know. Current stock price $128.89, which gives them a market cap of $365 billion. Revenue is $559 billion, which is up from $524, which is quite the significant increase. Earnings of $13.5 billion, pretty much in line with the previous years, and that gives them a PE of 20 with a forward PE of 24, which is pretty decent actually. When I started working for Walmart, they had a PE of well below 20 because I guess no one believed that they could grow. I don't know. Dividend yield 1.71% with a payout ratio of 45%, which is also pretty nice. Total assets $252 billion, total liabilities $165 billion, which gives them a total stockholders' equity of $81 billion, and that's a decent balance sheet at the very least. Really haven't had that in a while. Stockholders' equity being more than 20% of the market cap, which is okay, I guess. It's not great, but you know. Risk factor is Amazon, mostly. There's a couple other things that we need to be worried about, but overall, I think beyond Amazon growing at a rapid pace still, even with a revenue of like 350 billion or something like that. Obviously, the biggest risk factor. Also, Amazon getting into the healthcare market is kind of a problem, and there's a few companies that are kind of trying to gain market share, but Target probably one of the biggest contenders there. So overall, for a growth investor, Walmart really has never been the company to invest in. I don't expect that to change either. For a dividend investor, I think the safety of principle here is very important, and the dividend is not actually that bad, even though, you know, bond yields have increased significantly. But payout ratio is pretty nice. Dividend yield is decent. Definitely worth a closer look. And for a value investor, at a PE of 20, which I don't know how Yahoo Finance calculates the PE, but at a PE of 20, I think this is definitely worth a closer look. At a forward PE of 24 is slightly worse, but I think still, for many reasons, worth it, because it's a very safe company, it's a very stable company, and current growth is not actually that bad. So because of the stability and the continued growth, I think it's definitely worth a closer look for many people. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.